The broadcast is now starting. All attendees are in listen-only mode.
Hi, good morning, everyone. Thank you so much for joining us. This is Laurel Birchfield, the Associate Director at the Michigan Coalition Against Homelessness. You are here today to learn a little bit more about some new tax items that came about because of the American Rescue Plan. And we're very, very excited that you're here to join us. We know there's a lot going on and that you're all doing the best you can to serve your clients at the moment. So we're grateful that you're taking time to learn about one more thing that we can be doing to help folks as they are in experiences of homelessness or recovering from homelessness or at risk of it. So if you'll bear with me for 1 second, I'm trying to get my screen up so that you can all see our presentation. There we go. And I want to do a couple housekeeping items before I introduce our amazing panel and turn it over to them for some really fascinating content. And then hopefully we'll have a lot of time for Q&A at the end of the presentation. First of all, we do use GoToWebinar, which has a dashboard that you should be able to use to interact with us. We have everybody on mute, but we do encourage you to send in questions throughout the webinar. We'll be waiting until the very end to ask questions so that you are able to hear all of the content before we go into Q&A. Use the question box to type your questions in, or at the end, if we are able, we can always look at unmuting you if you are in a space without a lot of background noise and you can verbally ask your questions. But again, questions will be held until the end, and if we're not able to answer your questions, we'll be following up afterwards with answers. We also are going to be recording, or we are recording this webinar so that we can then share it out with everybody. As I said, I know you're all very busy, so I'm hopeful that this contains information that you find valuable and are interested in sharing with your network after the fact, and we encourage you to do so. We'll be following up after this webinar with information about how to access the materials that we'll share today, as well as the recording on our YouTube channel so that you can share the video with those who might benefit from this information as well. And if you are having any issues throughout this webinar with audio or visuals, we do know that sometimes GoToWebinar is a little tricky with audio. We recommend that if you have difficulty, log off or log back in again, or if you click on the audio option on your dashboard, you should be able to select how you plug into audio by using the phone or your computer. And I think that's all that I have right now for housekeeping, but I do want to ask a question of all of you, just so that we have a sense of who's on the call and what your experience is. As you should know, we are going to be talking about taxes. And so I just want to know from all of you if you or your agency regularly assist those that you serve with filing their taxes. And it should be set up so you only have one option. So let us know if this is a regular thing for you, if it's something that you do occasionally as needed, as identified by your guests and clients, if it's something that you very rarely take on but have some experience with, or if this is brand new to you, this is not the type of work that you typically do as part of your services at your agency. And I see people are not only slowly voting, but we're slowly getting more people signing in for our webinar. So I'm going to give it just about a couple more seconds so folks have a chance to kind of get situated and think about their response to this question. All right, and we have the majority of you have voted, so I'm going to go ahead and close our poll and share the results so that our panelists can see where we are. Thank you, everyone, for taking the time to vote. It looks like the majority of you do not regularly assist your clients with filing their taxes. So I'm hopeful that this is new information that is helpful for you, and that is something that encourages you to take on the support role with your guests and clients, especially given all the new resources we're going to be talking about today. Several of you, we have about 12%, do this as a regular part of your services. Thank you for joining us. Thank you for taking the time to learn about how you can increase the support that you're providing to your clients. And then obviously the rest of you occasionally do it as needed. So thank you again for sharing that. I'm going to turn it over to our amazing panelists because I think that we have just an amazing lineup of folks who have been working on this for a long time, and quite truthfully know a lot more about what we're facing right now with these new provisions under the American Rescue Plan than I could ever hope to know. So I have their information on the screen, and I failed to ask our panelists this, but I'm hopeful that they are available as follow-up after this panel. I have included their email information so you can reach out directly. Of course, you can always reach out to us as well, and we can funnel the questions to the right people. But just thank you to our panelists for taking the time to join us today. I'm going to start off by introducing Afton Branche-Wilson, who is with Poverty Solutions out of the University of Michigan. She is the Assistant Director of Community Initiatives at Poverty Solutions, where she leads research, data analysis, and evaluation projects with community partners in Detroit and across the state. She has a master's in public policy from the University of Michigan's Ford School of Public Policy. So Afton, thank you so much for joining us. I am going to try and do some wizardry on my part and pull up your PowerPoint while you say hello and get us started.
Thank you, Laurel, and good morning to everybody on the call. As Laurel said, thank you so much for joining us. I know you all have so much going on right now, and it means a lot that you came to listen to us. And hopefully you'll receive some great context and information today. So as Laurel said, I work for Poverty Solutions, and I'm going to talk a little bit about the expanded child tax credit and why it's a huge opportunity to support kids in Michigan and across the country. Next slide, please. So first, a little bit about us. Our mission is to cultivate action-based research, partnerships with community groups, policymakers, all with the goal to build knowledge about what does and doesn't work in confronting poverty while fostering real change. So we aim for policy reform in legislatures, programmatic reform in agencies. We're not a research center that aims to just write papers that sit on a shelf. We really want our work to move our communities forward. Next slide, please. And we do this by a number of types of projects. So we create research partnerships, engaging faculty and students, community groups and policymakers. We also try to inform the conversation about poverty at the local to federal levels. And we want to increase the number of students who leave U of M with some grounding knowledge about this complicated issue. And lastly, we design research and community education tools to drive action. This is why I'm here today. Next slide, please. So last year around March, we realized that the federal stimulus was going out, but low-income or no-income households were really at risk of missing out on these benefits. Early last year, the IRS really hadn't fleshed out their website yet, and so we wanted to make sure that households didn't miss out on this huge opportunity. So we teamed up with Sevilla, which is a Detroit-based human-centered design nonprofit, to create a community education tool. The result was a user-friendly website. You're seeing some screenshots of the website here, which covers what the stimulus is and how to get it. We did a lot of outreach to get the word out and have since gotten about 500,000 views on the site, which we're pretty proud of. The website's there at the bottom, and we keep it updated with the newest information on stimulus payments. So cut to almost a year later, next slide, please, where we are doing the same thing with the child tax credit. We're in the process of creating a website to break down what it is and how to get it. And really, we think this is important for a number of reasons, and that's what I'll focus my remarks on today. We see this as a historic opportunity to really change the lives of low-income families with children in the U.S. Some research from our faculty director, Luke Schaefer, and others found that the type of child tax credit that was passed by the American Rescue Plan could reduce child poverty by 43% across the country, while cutting deep child poverty in half and essentially eliminating extreme child poverty. This is a big deal, right? Eliminating child poverty at the extreme level is something that, an organization might have as their mission. And now we actually have the chance as a country to try to do that. Though this law was, just signed, this isn't a new idea. Representative Rosa DeLauro from Connecticut has been pushing for an expanded child tax credit since 2003. And over the years, she's slowly been getting more support of other Democrats and recently more Republicans like Mitt Romney. Academics and advocates have also been crunching the numbers and making arguments about what this could do going back several years. So this isn't a new idea, but the economic disruptions of COVID which have hit women with children particularly hard, have provided a window of opportunity for this to get passed. Next slide, please. So what is the child tax credit? It's a very simple idea. It's money each month to families with children for 1 year. If you have a child between the ages of 6 and 17, you get $250 a month. If you have a child under 6, you get $300 a month. And it's similar to the earned income tax credit and the stimulus in that it's distributed by the IRS, but it's different from these programs in a couple of really important ways. First, there's no work or earnings requirement. This is a huge deal, so I'm going to say it one more time. There is no work or earnings requirement to access the expanded child tax credit. For us, this is a recognition at the federal level that raising kids is expensive, but really important work for our society. And so this says to families, hey, we're going to give you some support to make this work easier, particularly to the lowest income or families with no income. The federal government with this measure is saying you need help too. The second piece that sets this apart from the EITC is that the payments are coming regularly. So they will be coming once a month from July through December. And this is different from other programs like SNAP or WIC in that families can choose what to do with their money. So they can choose to buy diapers, they can choose to pay utilities, they can buy prepared food. And we think this is really important because it recognizes that parents know what to use their money on, and that they have expenses that come up on a monthly basis that sometimes are unexpected, particularly when their incomes, let's say they work in retail, go up and down every month. So regular payments from the CTC will enable parents to afford additional basic needs and other necessities each month. And last, we think this program is really important because it treats low-income families and middle-income families the same. It's not a program for low-income families. It just includes them fully. So all families under a certain income threshold will be able to benefit from this program and will be treated equally. Next slide, please. So why do we need this? You guys all know this stuff, but I'm going to lay it out here so that you can be advocates for the child tax credit in your communities. We need this because even before the pandemic, the child poverty rate in our country was shamefully high. After counting in-kind benefits like SNAP and EITC, still 17% of children lived in families with incomes below the poverty line. You can see here that this sets us apart from peer countries. The United States is in yellow here on this graph. That shows our child poverty rate. We are way above countries like Canada, France, Ireland, the UK, etc. We are closer to countries like Bulgaria and Lithuania, but we have so much more money than those countries. So for us, this spending on the child tax credit is a way to reduce this poverty rate and really set our policy in line with what other countries are doing to support families and kids. The other reason why we need this is that, as you all know, the cash safety net pretty much doesn't exist for the poorest families. SNAP and TANF are the only games in town. And in Michigan, rather than spending federal TANF dollars on poor families, Michigan chooses to spend a lot of those dollars plugging other holes in the budget. For example, by funding college scholarships for mostly middle-class students. So we know that the safety net just does very, very little for folks who have no or very little income. So we need this expanded child tax credit to help support families at the very bottom of the income ladder. Next slide, please. So what do we think is going to happen as a result of this? Well, luckily, there's been a lot of research on the effects of similar income transfers to families. We know that boosting a family's income can improve children's health and development. They can do better in school. Down the line, there's evidence of reduced criminal justice involvement and increased lifetime earnings. What's great about this new measure and its monthly distribution is that it could make it easier for families to save. And we know that when families are able to save a little bit, this helps stave off evictions or shutoffs. The savings cushion kicks in with pretty low savings levels. Even at about $250, families are less likely to be evicted than families who don't have that little cushion. All right, next slide, please. So as I said, we're advocates for low-income families here, and it's really important to know what the opposition to this measure thinks about the child tax credit. So here are some of the things that we've heard. One, opponents fear that the child tax credit will reduce incentives to work. They've said it might prompt families to have more children because there's actually no limit to how many children you can claim the credit for. And of course, since it's not restricted like SNAP or WIC in terms of how you can use it, opponents fear parents will make bad choices. So next slide, please. But luckily, we have a lot of research on what has happened in other countries like Canada and the UK who have versions of a child tax credit. The evidence shows there's no reduction in work, and actually, some folks work a little bit more. This makes sense. People who are working part-time and are now able to access a child tax credit may work a little bit more because they can afford more childcare. And it feels silly to even say this, but there's evidence showing that the child tax credit did not result in a baby boom. And last, we know what families have spent their money on in Canada, and it's actually, they spend less money on alcohol and tobacco than before, which kind of indicates that maybe substance use issues are about stress and not necessarily about other things. And we also know that in the U.S., from studies of the EITC, that families who get it spend it on reducing debt, helping families afford things like car repairs, a new freezer, and yes, maybe some treats for little ones. All right, next slide, please. So when it was signed into law, the American Rescue Plan created the child tax credit only for 1 year. So it's really important that we make sure everyone who's eligible files their taxes to get their benefits. So researchers like us can study the effect of it, and advocates can make the case for a permanent child tax credit. But there's a lot of work to do here. At least 100,000 households in Michigan may need to file their taxes to receive their payments. And it's going to be hard to reach all of them and encourage them to file. But as I said, it's critically important that we do this now, particularly for non-filers who are experiencing homelessness. They could use some support making sure that they access these benefits. And make sure that Michigan's most vulnerable children get the support that they deserve from their government. All right, that's all for me. Thank you very much for listening.
Thank you, Afton. I appreciate all of that, and I appreciate all the work that you guys are doing over at Poverty Solutions. We love working with you and love all of the research and the support that you guys are putting out there. As I said, we will have space for questions at the end. So I encourage you all, if you have anything that you would like to ask our panelists, please use our question box and send those in at any point, and we'll circle back to them once we hear from everybody. So thank you so much, Afton, for that presentation. Next, we're going to hear from Matt Hetherwick, and let me go ahead and get the slide up just a moment. All right. So Matt began his career at Accounting Aid Society in January of 2018 as a tax site coordinator and was promoted to the role of Director of Individual Tax Programs in 2019. He's a mission-driven finance and accounting leader with over 12 years of experience in the realms of finance, business, and operations. After graduating with a bachelor's degree in finance from MSU, Matt earned both his master's degrees in finance and an MBA from the University of Michigan, Dearborn. So Matt, please take it away. Tell us a little bit about how we can connect with all of these great opportunities.
Hello, and thank you for having us. I'm Matt Hetherwick. Appreciate the introduction. That was fantastic. Thank you. A little bit about Accounting Aid Society and what we do. We've been in the Metro Detroit area filing income tax returns for 49 years for low to moderate income families. What that means is if you have income of $57,000 or below, you can come and see us. We can prepare your tax return at no cost to the clients. So our main focus is to work in the community to help not only file the income taxes, but to also take some time to educate the taxpayers about the tax system and some of the decisions they make. So for instance, an individual who may come in and owe money, we will take time to explain to them the situation, why they might have to pay the IRS or the state of Michigan, or possibly a locality if they live in a city that taxes income, and walk them through maybe the tough decisions of having withholdings on their paychecks and things like that, and what it means, what the impact is. So we kind of take a holistic approach of not only helping people access the tax return process, the IRS, getting refunds that they deserve, such as the earned income tax credit, the child tax credit. Within our state, we also have stuff such as the homestead property tax credit, the home heating credit, all very important things that we help clients and taxpayers access. But the big key is not only helping them access that stuff, but helping them understand all of it and teaching them and educating them, and hopefully having them come back to us for a couple years as they learn about these things, and then eventually maybe being able to graduate on and preparing their own as they successfully move on through the system. With that said, I'm not going to take a lot of your time today. My colleague Dennis is here with us as well. And Dennis is going to talk a lot more about the child tax credit and the earned income tax credit and its impact, and also how your clients or people you work with would be able to access tax return preparation. Thank you.
Thanks, Matt. And I am going to tell you a little bit more about Dennis, his colleague, and then have Dennis talk a little bit more. So Dennis Dolbee has more than 40 years experience in accounting and taxation through private practice, volunteer directors roles with nonprofit organizations, and more than 7 years with the IRS as an auditor and administrative appeals officer. He was employed by the Boys and Girls Club of America and provided technical assistance on finance, accounting, and taxation issues for over 11 years. Dennis has a Bachelor's of Science degree in accounting from Lawrence Tech University and a master's degree in taxation from Walsh College. He joined the Accounting Aid Society as the director of the Low Income Taxpayer Clinic in 2020. So Dennis, thank you so much for joining us, and we're very excited to hear more about what you have to say about these opportunities.
Okay. Good morning. Thank you for having us. Are you guys going to run the PowerPoint for me? You guys
I apologize, Dennis. I don't know if we got the PowerPoint. Is that something that you have and I can have you share your screen, or if you'd like to email it to me, we can take just a quick second and I can get that up.
Okay. Let me get it loaded here.
So sorry about that. It feels like even after all this time of working virtual, we still have these issues come up where we have problems with our technology. So thanks for getting that up, and I apologize. Let me know when you're ready and I'll shift it over so you can share your screen.
Okay. Oh, okay. Okay, go ahead.
All right, and Dennis, you should be able to share your screen now. Wonderful, we can see it. Thank you.
Okay, good. Okay, we talked about talking about 3 different topics. One would be the stimulus payments, the earned income tax credit, and the new child tax credit. So let's take a look at the stimulus. We've had 3 different sets of payments. The first 2 relate to and are accounted for on the 2020 tax return. The last round, the third round, the $1,400 payments, those will be handled on the 2021 tax return, which will be filed in 2022. So many people, because they didn't have and hadn't filed returns, did not get many of the advance payments for the first two rounds of the stimulus. In many cases, that was resolved by filing a 2020 return and claiming the credit on the return. The same will hold true with the third round of payments. So each one of those carries with it some things that are holding up some of the returns that we're seeing, and that IRS is taking a little bit longer to process those returns because they're having to go back and verify what payments were made in the advance payments, and making sure that that's all reconciled with when the return is filed if they're claiming the credit. So we're seeing a little holdup because of that. Again, this is all last minute stuff that was thrown at them. And, you know, honestly, they're so far behind, they still have a significant number of 2019 returns that were paper filed that have not been processed yet. So a lot of this is really slowing them down this year. So there's one big difference, and this will apply later as well, is the advance payments were not subject to any offsets. And what do I mean by an offset? Well, an offset would be if you owed taxes from another year to the Internal Revenue Service, you would have past due child support, you could have past due amounts to a state, or you could have past due student loan payments. Those were all subject to offsets. Well, with the advance payments, they were exempt from any offsets. However, when we got down to filing the return and claiming the credit on the returns, they would now be subject to the offset because it wasn't covered in the law itself. Now, the part of past due taxes owed to the IRS, they came back and said they were not going to process the offsets. However, the other ones, they have no control over. So some people may still see some offsets when they file the return and claiming that credit. So let's go to the next slide. Oh, I'm sorry, I'm to run the slides. Okay, again, the first two are reconciled on the return. If the IRS miscalculated your payments, you may be able to keep the difference. If you're underpaid, you can claim it on the recovery rebate credit on your return on your 2020 tax return. And again, we'll reconcile the last one on the 2021 return. With the first two payments, when you have parents that are no longer married or they've never been married and share joint custody of a child, there were some situations where each could receive the payment for the same child and that they would not have to repay any amount of the money. Again, they've closed that loophole for the third check. So keep in mind that, you know, you may have the situation where somebody claimed them on their 20 return. And so the IRS may process the payment, but yet when the other parent files their 2021 return, they will also be claiming the credit, and then it's going to delay both returns because it won't reconcile on the IRS records. How they're going to handle all that, of course, we don't know. That'll be coming later. We'll see what they're going to do. In 2021, if you add a new dependent, again, you can claim the stimulus payment again on your 2021 return filed in 2022. The Earned Income Credit has been around for a number of years. It's been one of the most economically effective tools in the anti-poverty programs. supporting over 25 million people nationwide. Again, it's a refundable tax credit. Again, it promotes work and reduces poverty. And 28 states, including Michigan, again, have their own version of the credit. This is what it looks like in 2020 for the earned income. Again, you have the phase in and phase out of the AITC based upon the earnings. And so you can see what that is. Again, people most likely wouldn't affect this group, but they do have a phase out if people would have significant investment income. Again, this is what it looks like in 2021. Again, they've increased it a little bit. Again, they've given you a little bit more in the way of investment income. If somebody may have some of that. So they are recognizing that, they have increased that. The increases are generally done based upon increases in the standard of living. It really helps earnings of low-income workers. And again, remember, the earned income tax credit is based upon earnings, whether it be on a W-2 or whether it be somebody that's self-employed. That will be reported on the return, and they'll be able to claim the credit. So it increases as the people go along, and it works to encourage and reward work. What have we seen? Well, 1 in 5 people do not claim the credit in Michigan. There looked like there was $350 million in unclaimed EITC dollars. Again, misinformation, the complexity, the confusion over filing requirements. Many people just not aware. A lot of people just don't have experience in filing tax returns. Fear of being audited, not wanting to deal with the IRS, unaware of what type of work qualifies. You know, you would have self-employed contractors, daycare providers. Uber would be a number of situations that would work to qualify for the credit. One of the things that we see is a lot of the credits are done by a paid preparer. We see a number of problems with that. We see a large error rate of 26% in the ones that are filed. We also see that people are being charged a lot of money to get these returns prepared. We don't see it as much, but in the beginning there was a lot of situations where preparers exaggerated the amount of earnings, reported it on a Schedule C or self-employed income. When questioned by the IRS, they couldn't support it. They end up having to repay it, but yet the preparer has already gotten their fee and their money came out of that refund, and many times after that, they're hard to find. So this is prepared, these type of preparers have created a lot of problems in our area and people that we work with. And so we're continually trying to help these people. And again, one of the things with both the VITA program and the Low Income Taxpayer Clinic is, again, we're not charging for our services. Again, hard to reach population. We talked about most of these people here. It affects different groups and different things. One of the main things that they did to really help was that in 2020 for the returns, they allowed people to use their 2019 earned income if it was higher than it was in 2020. Again, that has been continued into 2021. So again, it's people need to have that 2019 return available for the preparers so they can pick the appropriate earned income level to get them the maximum credit. So the new child tax credit is going from the $2,000 to $3,600 per child if they're under 6, and $3,000 for children older than 6. For children age 17 and 18, and also full-time college students up to the age of 24, it's $500. The credit is now fully refundable, which it wasn't before, and the credit will be split in half. Half will be paid in the last half of 2021, and the balance will be paid on the tax return in 2022. Again, here's just a visual of what we've seen going on with the credit. And again, we're going to make sure that everybody gets the PowerPoint so you'll be able to see that. Again, credit is available to individuals who have children, adjusted gross income of less than $75,000 or less than $150,000 for a married couple. Again, it starts to phase out, and we'll cease when individuals get to the $95,000 range and the $170,000 range. What are some of the provisions? Well, the child must live with you for at least 6 months out of the year. You and your child must be U.S. citizens. Married couples filing jointly, at least one spouse needs to have a social security number or an ITIN. The child must have a social security number. And again, as I mentioned earlier, parents who share custody, they both cannot get the new credit. The plan is to disperse the credit, the refundable part of the credit, over the last 6 months of this year. It'll be $250 for older children and $300 for children under the age of 6. Again, IRS is supposed to have a website up to deal with that. They're not even planning on starting on that till after the filing season. So how it's all going to work, we still don't know. So that'll be forthcoming in the next month or so. We'll have starting to get some better ideas how they're going to handle this. Again, we've talked about the joint custody arrangement. Again, there is a provision in here that you may have to repay all or part of the payment. There is a safe harbor in there. Again, we'll have to wait and see how they're going to interpret that and how they're going to work with it. But again, that would probably be just fixed up on whatever comes about on your tax return. So time we'll find out in time how they're planning to handle that. Again, these new payments during the last 6 months of the year, again, are exempt from the offsets. But as with the other stuff, when it gets to your tax return and you're claiming a credit in 22 on your 21 return, it could be subject to offset. Again, that's another thing we will have to wait and see what IRS is going to do with that when we get to the next filing season. And I think that's the end of what we had.
Thank you, Dennis. I appreciate this, and I appreciate your ability to share so much with us when there's still so much that is unknown. And I know that you're all going to be very busy over the next couple of years as these new items take effect, and you're able to kind of process how to make sure people are benefiting to the best degree that we can from these new provisions. So thank you very much. I'm going to take back the screen for our next presenter. And let me get this up. As a reminder while I'm doing this, if you have questions, do please send them to us in the question box. I've seen a couple people sending some things in. I appreciate that. But feel free, we will have lots of time after our last presentation for folks to be able to ask questions and get information. But as we shift into our last presentation, I just want to kind of acknowledge that this is a lot of really good information for us to process. And I think as we're sorting through how we can imagine our guests and our clients accessing these new benefits or expanded benefits and the resources that hopefully lift them out of their current situations, or at least give them an opportunity to kind of move forward, then the key to all of this is filing taxes. And so I'm very excited that Emma's going to be joining us. Can I just get, Emma joined a little late. Emma, are you with us?
Yeah, I'm here.
Excellent. I just want to make sure you're seeing my screen properly and I have your presentation up.
I am.
Excellent. So let me introduce Emma and say thank you for joining us. Emma is the VITA program manager at the United Way of Washtenaw County. They work with a team of about 90 volunteers in a normal year to file around 1,200 free tax returns just in Washtenaw County. And I'm very curious to hear if you think that number will go up with these new provisions. This year, they've shifted to a service model that includes both virtual VITA and a drop-off process for people who don't have the required technology to upload documents themselves. The program is interested in providing accessible services in different models that function for a variety of taxpayers. So Emma, please share with us how we can connect with you or with others in other counties, and tell us more about the VITA program.
Yeah, so if you want to go over one slide, and then, sorry, I forgot this is one of those ones you have to click for every bullet to show up. So there are different programs that are sponsored by the IRS, and the two main ones that provide free tax prep are called VITA and TCE. So these are programs where volunteers will, partner with an organization like ours at United Way or Accounting Aid Society to become certified in tax prep. They take IRS exams that prepare them to deal with a lot of the most common tax issues that we see. And we then operate free tax filing clinics where people can come in and get their taxes done. The last presenter had mentioned that paid preparers, we often see a high level of error, and VITA programs and TCE programs nationally have over 90% accuracy rate. So it's very secure, very safe, and I think it's a lot more enjoyable for a lot of people to get their taxes done this way, because the volunteers are doing it because they want to support these people, and they're friendly, they explain things, they make people feel comfortable. And so it's one of the really great things about the program. And so if you are wondering how you figure out if there are VITA or TCE sites in your area, there's a link on the IRS webpage. I have it hyperlinked here, but it's just find a tax prep site. And you can go there and you can put in your zip code or your address and then choose how far away somebody can go to get to a site. And it will show you a list of sites that are open and their hours, their phone number, and whether they are an appointment site or a walk-in site only. Next slide. Can we go to the next slide?
Yeah, apologies, it's not wanting, there we go, it didn't want to advance. Is this the right one?
Yeah, so the two programs are a little bit different. I didn't put a lot of detail in here about TCE because I run a VITA program, but so VITA is specifically for families and individuals who are low income. So anybody under $57,000 is eligible for the service, with some exceptions. People need to have either Social Security number or individual taxpayer identification number. And it's for people who are working and not working, so there's no restriction on employment. People who are self-employed with some exceptions. And then we get a lot of people in Michigan who are low income who really only need to file a Michigan return because they're getting things like the home heating credit or the homestead property tax credit. And we will do returns for those people as well. And we also help people who have back years of taxes to file. So, we've talked a little bit about the 2019 return right now needing to be filed to get some of these benefits. VITA sites can help people with that. It's typically deprioritized during tax season, but if there are people who have those years that need to get filed, definitely reaching out to VITA programs in your area might be able to find somebody who can do them. And then TCE pretty much provides the same service. It is specifically for people who are 60 or older. And I don't believe that there is a income threshold for it. So, you know, both sites can be searched for with that same hyperlink, and it'll tell you which one it is. Most of the TCE sites are run by, oh gosh, my brain just went completely blank. AARP, there we go. And so if there's an AARP in your area, there's a chance that they may have a TCE site. Next slide. And I just wanted to mention, I don't know if this is something that's very helpful for your specific population, but there's also myfreetaxes.com, which is a website provided in partnership between the United Way and the IRS, which is providing free tax filing software for anybody. And actually the income limit was erased this year, so anybody can use it. And so if somebody's comfortable trying to file their own return, or they have a simple return, it's a pretty user-friendly software. It is 100% free. It's actually the same software a lot of VITA sites use to prepare their taxes. And it's good if somebody doesn't have their documents that are required for us. So we have to have a social security card and a photo ID. And so sometimes if we have people who just don't have or can't access that, they can file through My Free Taxes if they, you know, if they know their social security number, something like that. Next slide. And then I think we've pretty much covered this, but there's some really basic reasons to file taxes, and a lot of people don't, because they don't, you know, they don't realize that the credits are there. But sometimes, you know, if they don't have kids, if it's just an individual, they don't realize that there are still some benefits. The top one right now being you have to have filed to get your stimulus payments. But also if anybody is working, you almost always have money withheld from your paycheck. But if you are under a certain income limit, a lot or all of that money may be refunded to you. And the same for unemployment this year. If you received unemployment, some of your unemployment taxes are going to be refunded. So that is super helpful for individuals. We also know that filing those taxes is required by some places if you're applying for support. So, you know, we know for low-income families being able to access support programs, there are many that will require a tax return or use it as one way to determine a person's income, and so it's just can be helpful for a lot of access issues. And it prevents identity theft, which we do see as a problem. We've had a lot of our clients this year have some challenges with identity theft, and so filing a tax return just helps to make sure no one can file one in your name. Just a little extra security. All right, next slide. And the last thing to know, I mentioned this before, is just to be able to file, a person does need to have their photo ID and social security card, or their social security statement, or an ITIN. So an ITIN is an individual taxpayer identification number, and those are provided to people who are not US citizens. And let's see, anything that's showing income. So this is the part that I think is the biggest challenge for people when, you know, kind of helping their clients to get ready to file taxes, is knowing what that person needs. And a lot of it is just asking, like, well, what did you do last year? And so if you worked a job, you should have a W-2. If you received Social Security, you should get your SSA 1099, your Social Security statement. So it's really talking to a person about, you know, what they did, and then looking for what document might correspond to that. In Michigan, you also have to, for some returns, you need to be able to also tell any non-taxable income. So any sort of SSI, other benefits, any money that a person is living off of can come into their tax return. And so I think that really covers the requirements for accessing the program. I will say that a lot of us who run VITA and TCE programs, it is our top priority to be able to help people access the services who are, you know, not going to be able to pay for it, who are going to see the big benefit from filing. And so we are often really happy to partner with other organizations to do promotion, to do education and outreach, make sure that we're reaching people who are eligible for these really big credits that the other presenters have talked about. So a lot of sites are probably already booked for this season. Some of them are participating in the extended tax season and may still have appointments, but even if they don't have appointments open right now, I would say it's still worth contacting them to find out, how do we plan and get ready for next year? Or are you doing anything outside of season that could help my clients? So don't hesitate to ask, because we know the importance of this work for helping people to get, needed funds to support themselves. I think that's everything I have. Do I have any more slides? Nope.
Nope, that's it. Thank you. And thank you for all the work that you and all our panelists are doing to connect folks to these opportunities and these resources. So that's all that we have today. We did book this webinar for a 2-hour period, not knowing quite if we would get a lot of questions. And so we do have time now for people to be submitting questions. Allison's going to join us. My colleague Allison Green is going to join us to read some of the questions we're seeing in the question box for our panelists. But I wanted to just answer a couple things I've seen pop up. One, yes, we are going to make all of these PowerPoint presentations available to you. I know at least Emma referenced a hyperlink in one of them, and some great visuals and items for you guys to kind of process. So that will be sent out after the webinar, along with a link to the recording. So you can go back and you can watch this. As I said at the beginning, also share it with your network. So that will be coming out, I'm hoping later today, if not then early tomorrow morning. And Allison, what other kind of questions are we getting in? And feel free to continue sending them in as we go through these.
Yep, so far we have 2 and we have a hand raised. So the first question is, what about when parents rotate who claims their child from year to year?
And I'm going to assume that's about the child tax credit.
Correct, and I think it was addressed, but if we just want to go back and clarify.
For 2021, for this year, it'll be who's ever entitled to claim them on their return. Whatever the agreement is, that's the person that will be able to claim them, provided they reside with them. There are any number of things that could come up with all this. So many of these are going to have to go back to the divorce decrees and break some of these ties. I anticipate we're going to have a lot of questions on this. And right now we have no guidance.
Okay, thank you. Someone is asking how much the monthly child tax credit will be. Afton, I think you said in your presentation that it was $300, but I might be wrong.
It depends on how old your kids are. So if you have, let's say, a child who's 4, you get $300. If you have a child who's between 7 and 17, then it's $250. And Dennis, correct me if I'm wrong, but that's what we're hearing.
That's correct.
I'm going to interject a little bit too. And the important thing to know is that that's for the 6 months. To get the second half of it, you have to file your tax return next year. So that's not an ongoing payment into next year. It's just for the last 6 months of this year.
Great, thank you. We have, what documentation is required to document 6 months of living in a household?
When we have gotten into those controversies, many times you're looking for school records, you're looking for maybe doctor's records that show the address of the child. Those are a number of the things that we have used in the past to support that.
Great, thank you. This one's probably also for you, Dennis. They're asking for clarification on when exactly do families apply for the child tax credit, this year's tax season or next year?
What we don't know yet is the IRS has to get that website up. It's supposed to be up by July 1, and that will explain how you will register to get the advance payments during 2021. The second half again will be paid on the tax return for 2021 filed in 2022. One thing that I didn't mention before is some people can actually opt out of getting the monthly payments in 2021 and get the full credit in 22 when they file their tax return.
Okay, great. Thank you. Someone is asking if you have to pay back the new tax credit.
There is a provision in there, yes, for it to be repaid. There's also a safe harbor rule on how much you may not have to repay. But again, we have to wait and see how IRS is going to interpret that.
Okay, great. We have, what if a client is going through a divorce and it will not be final until the end of summer, like August, September? Example, the husband gets the money through his direct deposit. How will she get the money without having an attorney? That might be a legal question. I'm not sure if anyone here is able to answer.
Yeah, I would say that it may be. Again, that's something I think we need a little bit more guidance on how they're going to interpret that. And it may, again, it may depend upon how they filed their 2020 tax returns. Whether they filed a joint return or whether they filed married filing separately could have an impact on that as well.
Thank you. So we have two hands raised. So first we have Ron. I'm going to unmute you so you can answer your question. Oh, I think you have to unmute yourself. It's not letting me unmute you. Okay, we also have a question from a raised hand from Kathy. Do you have a question you wanted to ask?
I did submit my question and it was answered. Thank you.
Allison, can you check the chat? I think we have something in there as well.
Thanks. If I'm a single parent with an ITIN earning $20,000 and my child has a social security number, will I be eligible to get the expanded child tax credit?
With the child having a social security number, yes.
All right, great. We got answers to almost all of our questions. There is no more questions listed in the question section or in chat right now. So I'm going to give people a second to see if they want to have something else on their mind that they want to ask. If not, I'll throw it back to Laurel to wrap us up.
Well, Allison, while you're doing that, I actually have a question that I'd like to ask Emma, and that was regarding the requirements for working with one of your volunteers. Our folks do struggle with IDs and with social security cards. I'm wondering if you have any guidance or any examples of ways that you've been able to work with folks who do not have that documentation. And I apologize if I'm putting you on the spot, but as an example, we use HMIS cards sometimes as an identifying document. So just wondering if you can speak to that a little bit.
I will do my best. The struggle for us is that that is a IRS requirement, so not something that our individual programs can kind of work around. Normally what we will do is if somebody doesn't have one of those documents, we will help them to work through the Social Security website to request a new one. So having somebody who can do that with them can be super helpful, if they don't have the tech or whatever, and then having a place where that Social Security card can be mailed. And so unlike with our program, normally what we'll do is we'll tell them we can prepare the return, but we can't file it for you until you get this card. So we're just going to hold on to it, get back to us as soon as you have it, and we'll take care of it. And the same with photo ID. So, just figuring out, it needs to be like a state issued ID or a passport. So do they have, not even a driver's license, but an ID card that's federally recognized? So, it's definitely a barrier, and it's one that I wish I could provide more suggestions on, but those are the two key things that we absolutely have to have.
We did have another question coming in. I think this might also be for you, Emma. The question is, what are some strategies to work with returning citizens on the earned income tax credit?
I mean, I think the big thing for us is once somebody knows about it, you know, they are much more likely to file that tax return, and you know, the requirements don't really, outside of this year, the requirements do not change too much from year to year. So for us, it seems like the big thing is getting people who don't know about it to be aware of it. And that's just a lot of, you know, community education and outreach and saying, you know, hey, you know, if you're not filing a tax return because you don't think you make enough to get anything back, if you have kids, you should be filing a tax return because there's a lot of money that could be coming to you to support your family. Other than that, you know, it's just reminding people to keep track of their income, keep track of those documents, and make sure that they have it all ready at tax time. So as people come in over and over again, they come in a lot more informed, and they just know from last year, here's the stuff I need to bring and here's what I should be prepared for.
Okay. Anyone else? All right, Laurel, it looks like we don't have anything in the chat or in the question box.
Thanks, Allison. I appreciate your help with that. And I want to give our panelists just one last opportunity. If there's anything that you would like to come back, anything that you wanted to highlight or stress from your presentation, or anything that you forgot to say to share with our panelists before we conclude today. Okay. Well, I know that we've hit the hour mark, and most people, we try to keep these to about an hour, and I have seen we've lost some folks. So thank you to everyone who stuck around with us. Thank you again to our panelists for sharing all of this information. We know that this is a complicated process and there's a lot of information we still don't have, but I really appreciate all of you coming and giving us your expertise and your time to share what you do know and how you're working to connect folks to these resources under the American Rescue Plan. I believe that we are going to be seeing more information come out with more resources that may be helpful to those on the call who serve people experiencing homelessness. And so Micah will continue to share those resources and that information as it becomes available. I have my information on the screen now for anybody who is still with us and looking at your computer. Feel free to reach out to me if you have other questions and you would like me to direct them to our panelists, or if there's something that I can assist you with. But I know that this is a really important thing for us to be aware of, and for us to be trying to build capacity at our agencies to connect our clients and guests with these resources, especially with all of these new opportunities through the stimulus checks, the EITC, and the expanded tax or child credit. So thank you to everyone for joining us. Thank you again to our panelists. I hope you all have a fantastic day, and we will stay in touch. Thank you, everyone.